Hello, everyone, and welcome to our inaugural Futures and Options World Japan conference, specifically to this fireside chat, which will dive deeper into the topic of and recent trends surrounding electricity futures contracts and related products. When the Tokyo Commodity Exchange launched these contracts just over 2 years ago, it committed at the time to building this market, which it noted would contribute to the development of the country's electricity industry and the stabilization of its energy market. Fast forward 2 years, nearly to the day, and the number of TOCOM electricity futures market participants has grown nearly tenfold, while trading volumes for electricity futures have grown steadily as well in parallel. Monthly trading volume and month-end open interest both reached their highest levels since September 2019 in May and June 2021, so this year, respectively. Most recently, TOCOM announced plans to partially revise specifications from April 2022, including expanding the number of contract months from 15 to 24, and it's also adding LNG futures to its current listings of electricity, crude oil, petroleum-related futures. But as with a lot of things, there's still progress to be made, including in terms of diversity of market participants and hedging, for instance. And obviously, who best to discuss some of the market's main successes, but also challenges that remain, than my two distinguished speakers today. Firstly, Mr. Masahiro Yamashita, General Manager, Head of Power Market Preparatory Office, and Mr. Kousuke Araki, General Manager, Business Operations, Market Planning, both at the Tokyo Commodity Exchange, part of the Japan Exchange Group. So just before we start, I'd like to mention that you can direct any questions that you may have to our two speakers. Their contact details will be available at the end of the presentation. So without further ado, it gives me tremendous pleasure to hand over to Mr. Masahiro Yamashita, who will kick off this fireside chat today with a short presentation on the progress of the electricity futures market in Japan so far. Yamashita-san, over to you.
Thank you for the introduction. I appreciate the FOW for giving me this opportunity. Today, I'd like to share with you the latest information on the progress we have made and what is currently going on in the market 2 years after we started power futures market. Next slide, please. But before I get into that, let me give you a brief explanation of Japan's power market for those of you who are not familiar with Japan power market. The reason why so many people are interested in the Japan power market is the size of that. Japan is the world's fourth largest power consumer with annual consumption of more than 900 terawatt-hour and annual sales of 120 billion US dollar. What makes Japan unique in the world is the transmission network runs on two frequencies, the east at 50 Hz and the west at 60 Hz. Next slide, please. Japan has a wholesale power market called JEPX. And since the full deregulation in 2016, trading volume has skyrocketed. More than 700 companies entered the power market since 2016, and these new entrants rely on JPX for much of their power procurement. If you look at this chart, you can see that in January of this year, due to severe winter and fuel constraints, the average daily JPX spot price jumped to a historical high level of about 170 yen per kilowatt hour, or more than 1,500 US dollar per megawatt hour. This price hike has resulted in huge losses for many power retailers. Next slide, please. Given this situation in Japan, we are operating the power futures market to provide hedging tool for price risks, power forward curve, and clearing service for OTC transactions. Next slide, please. We are listing a total of 4 products, East and West base load and peak load. These are all a monthly cash settled futures based on JPX spot price. And we offer up to 15 consecutive monthly contracts and plan to extend this to 24 months at the request of the market participant next year. Next slide, please. The number of participants has expanded from 13 to over 110 at present, particularly since the sharp rise in JPX price in January. The number has been expanding rapidly, mainly among power retailers who have realized the need for hedging. In the pie chart on the right, overseas traders are defined as those who trade directly from overseas, such as London and Singapore. However, recently there has been a growing trend for overseas traders to set up bases in Japan and trade from Japan. Another trend is the increasing participant of renewable-oriented power retailers, because the procurement price of feed-in tariff derived renewable power is linked to JPX spot price, so they need to hedge. Next slide, please. As the number of market participants increases, so does the volume of transactions. Until last year, trading was largely concentrated in the East area base load, but with the increase in the number of the diversity of the market participants, trading in the West area or peak load contract has also increased. Another feature of TOCOM power market is that trading volume dropped sharply at the end of the accounting period in February and March each year. This is because many Japanese companies have restrictions on the trading next fiscal year's contract months for accounting reasons. We call it the hedging accounting problem. Next slide, please. This chart shows the price of the power futures since JPX price spikes in January. As you may have noticed, up until March, price has been rising slowly in line with the rise in the crude oil price. But when the OCTO, which is the cross-regional transmission agency, released a report at the end of March indicating supply concerns for the summer and winter, only the price of the summer and winter contract months rose sharply as risk-averse power retailers actively hedged. So this summer, Japan hosted the Olympic Games, but power demand didn't increase much, and the JPX price was stable. So as a result, July and August futures fell sharply from its peak in June, resulting in the hedge losses for the long hedgers. And now our interest is shifting to the winter, when supply concerns are said to be stronger than in summer. With the bitter memory of the January this year, many power retailers want to hedge even if the price is high, but sellers haven't become very cautious, and there is an extreme shortage of sell orders. So that is making it difficult to execute. Next slide, please. The graph compares, this graph compares TOCOM's power forward curve for the last year and this year. As you can see, the forward curve for 2021 has shifted significantly upward from the one for 2020. The reason for the overall increase in the price level is the rise in the price of LNG and other fuels. But particularly, large price increase in the January and February contracts seems to be the sign that the power retailers are willing to pay a large risk premium to hedge for this period, as they remember the price hike in last winter.
Thank you so much, Yamashita-san, for this presentation. Just one follow-up question for me, I think, and I think our listeners are probably going to be interested to know. So you've kind of gone through, you know, sort of the situation, the developments so far, some of the successes as well of the, you know, of the sort of implementation and the development of this market. But could you maybe elaborate further on, you know, some of the issues maybe that still remain in the Japanese electricity future space, and maybe also the impact they're having on the market?
Yes, the biggest challenge for us is to secure power generation companies, or maybe we can say the natural short hedgers, as sell-side players. In Japan, incumbent utilities and its subsidiaries own about 3/4 of the power generation capacity. And if they were to enter the market, the size of the market, the size of the futures market would expand dozens of times. There are several issues that they need to address in order to participate in the futures market, such as hedging accounting. But another reason is that a one-stop hedging environment where power and fuel prices can be hedged at the time on the same platform hasn't been in place yet. So this is why we are launching the LNG futures.
Perfect. I think that's a very good transition as well. Thank you, Yamashita-san. I think, as I said, a good transition for Araki-san to sort of kick off on his own presentation, which will focus on LNG contracts and LNG futures, but also their value for market players. So let me just share my screen for the second part, obviously, of this presentation. Here we go. There you go. Over to you, Araki-san.
Thank you very much for the introduction. This is a summary of the draft contract specification of our new LNG contract. It is a cash-settled futures contract, and the underlying index is a Platts JKM, Japan Korean markup, which is an established LNG spot benchmark price for Northeast Asia. JKM-based futures contracts are actively traded in US dollar in ICE futures and CME, and our JKM futures contract is modeled after these contracts. There are two unique points in our contract compared to the ICE and CME contracts. Firstly, it is traded in Japanese yen, which is convenient for hedging the spark spread to lock the electricity price, sales price, and the LNG purchase price. As Yamashita-san explained, TOCOM has an active electricity futures market. Since it is traded on JPY basis, it is easier for utility companies to trade LNG futures in the same currency to avoid currency conversion when calculating the spark spread. That is a spread between electricity price and LNG price. Also, there is an additional benefit for market players to reduce trading costs by trading these contracts in the same platform. Secondly, trading unit of TOCOM contract is 1/10 of ICE and CME's counterparts, 1,000 MMBTU in other words. For those of you who are not familiar with the natural gas market, MMBTU stands for Million British Thermal Unit, which is commonly used as a trading unit in natural gas and LNG trading. Next slide, please. This chart shows the growth of LNG market in the last decade. The trading volume represented here is the import volume of spot and short-term LNG transactions. As you can see, the volume has been steadily growing and accelerating in recent years. And there is an unanimous view that this trend will continue in the next few decades, partly backed by the transition towards carbon-free economy, in which LNG and natural gas play a key role as a transition energy to bridge the gap between renewable energy development and shifting away from coal-fired power plants. So LNG market has a potential for further growth, and it's worth investing. Next slide, please. This chart shows the electricity spot price and LNG spot price. LNG price represented in blue line is Platts JKM, and electricity spot price represented in red line is the spot price of Japan Electric Power Exchange, JEPX. That is a physical electricity market operator. As you can see, electricity price and LNG price are highly volatile and highly correlated, but their spread is unstable at the same time. This is where the need for hedging spark spread arises. Especially the steep price hike in the last winter has drawn hitherto conservative Japanese utility companies' attention towards futures market for hedging the spark spread. And Japanese regulator also suggested the use of futures market as one of the options in the risk management in energy companies. Next slide, please. This chart shows the spark spread. In this chart, electricity futures price represents Japan's East Area baseload futures on TOCOM, and JKM futures price represents CME's JKM futures, converted into JPY per kilowatt hour basis. As you can see, the spread narrowed in October 2020, but if you were to hedge the spread in February, when the spread were wider, you could have locked the power generation margin at this highly profitable level. This trading strategy is useful not only for power generators, but also for those of you who have experience in this type of trading, European and US energy markets. Next slide, please. This diagram summarizes the two main trading strategies you can employ in our new LNG market in conjunction with the other markets. Firstly, you can make locational or currency arbitrage between ICE and CME's dollar-based JKM futures and TOCOM's JPY-based JKM futures. Many traders are actively doing this trades in Dubai crude oil futures using ICE and TOCOM markets. Secondly, you can make inter-commodity arbitrage, that is a spark spread, by trading electricity futures and LNG futures on TOCOM. Next slide, please. This final slide shows how overseas traders can participate in TOCOM market. You can trade either through overseas brokers or TOCOM broker members. That's all I have to say today. I'd like to conclude my presentation by welcoming active participation of those of you who are watching this session today and looking forward to seeing you in a market. Thank you very much for your attention.
Thank you, Araki-san. I'm just going to pause just for like a few seconds on the contact page so that people can have a look at your contact details, if that's okay. Here we go. So just I guess before we finish, I think that was obviously equally as interesting as your colleague's presentation. I do have some follow-up questions for you. So just to set the scene a bit, can you just tell us, well, tell me and our listeners what the timeline is for the market launch of this this new LNG, liquid natural gas contract?
We filed an application for government's approval on market launch this month, and it will take at least 3 to 4 months for government to review the application. And once the approval is given, we are going to launch the market in April 2022 at earliest.
Okay. I think there's going to be a sort of a fair number of sort of overseas listeners, so non-Japanese kind of listeners kind of listening into this chat. So can you just sort of tell everyone, you know, how can these overseas players access the TOCOM electricity and LNG futures market?
Okay. Overseas players can trade in a market without having an office in Japan. As I briefly mentioned in my presentation, there are two possible ways to access to our market. And one is trading through futures commission merchants, that is TOCOM clearing brokers. Or the second type of participation is trading through overseas futures commission merchants, providing access to TOCOM clearing brokers omnibus account. So yeah, you can, for those of you who are interested in a market, can contact to the address given at the last slide in my presentation.
Yes, so just for reference, the sort of slide 2 or 3 minutes ago where both email addresses were. So Yamashita-san, Araki-san, do you have any kind of concluding comments that you would like to sort of share with our listeners? Maybe Yamashita-san first.
Yes, I'd like to say Japan's power futures market is still in its infancy, but interest is growing rapidly, and there is a lot of room for the potential growth. So I hope that today's Fireside Chat has sparked your interest in TOCOM power futures. That is what I'm willing to do.
Araki-san, kind of some over to you to sort of conclude the chat.
Oh, thank you. As I mentioned, LNG has a huge potential for further growth, and derivatives market can play a key role for players to hedge or control their potential risk, and also it's by developing this derivatives market, it can support the growth of a reliable LNG benchmark price. spot benchmark price as well. So active participation for listener today, very welcome, and I very much looking forward to the participation of these participants. Thank you.
Thank you so much to both our speakers, and thank you so much to our listeners today for tuning in. Let's hope you enjoyed the rest of the conference, and thank you to Yamashita-san and Araki-san for joining me today to have this fireside chat. Thank you, and goodbye.
Thank you very much.
Thank you very much.